Hey, Dan Passarelli here. There's a subject in option trading that is often really confused, and I think it's really important for everyone to have at least a basic understanding of that. And it is, what is a market maker and how do market makers trade? So, look, take a look at this option chain here. Let's expand it a little bit. So, here we see, here's the ask, here's the bid. This is where I can buy these options. This is where I can sell these options. And there's over 100,000 different options out there. So when you buy an option, you're literally buying it from another person somewhere in the world, a living human being. And that person disseminates this price and says, hey, you can buy this from me at $6.65. But not everyone in the world has a vested interest in this particular option. So we need people who are willing to step in and take risk and say, I will buy and sell with people and make these markets provide liquidity, right? And those people are called market makers. So market makers nowadays, they're usually part of a bigger firm that makes markets. And what they do is they run theoretical values. They say, okay, well, this option is worth this. And if this option is worth this, then that means this one is worth this and that one is worth that. And because put call parity, this one is worth this and that one is worth that. And they just program their computers to send out all these bids and all these asks. And so when you go and you put in order to buy these at $6.65 and you get a fill, you now own those calls. You literally bought those calls from a market maker. So this is, just sort of the basics of this, and there's a lot more to it. But it's important to understand that, because once you do, you understand volatility better, you understand how to get better fills better, and you just have a better understanding of everything it is that you're doing. Hope that helps. This is Dan Passarelli, Trade Smart.